Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Dennis McGonigle, Executive Vice President and CFO of SEI, to discuss accelerating R&D investments during the economic uncertainty of the pandemic. Dennis, it's great to see you. Welcome to Trade Talks.
Thanks, Jill. Thanks for having me.
And during COVID-19, why is it critical for companies to make these types of investments?
Well, I guess from our perspective, when you're in times of uncertainty, which we're certainly in and have been in for the past 8 months or so, that there are times that you should be looking not just at the uncertainty itself and how to respond to that, but the opportunities that may come out of it that you can take advantage of when things change. And we've been through a number of crises, if you will, over the past 30, 40 years as a business, the financial crisis being one of those. And in those periods, we feel that while our business may be somewhat disrupted, many of our clients, the markets we serve, are equally, if not more so, disrupted. And that if we invest and lean into our clients, lean into our markets, look for opportunities that exist not only for today and how we can help service our clients better and help them perform better, but come up with new product ideas, new service ideas, new solution ideas that will help them carry through these periods of disruption, will be best served. You really can't give up the future just because of uncertainty today. In fact, from our perspective, you have to capitalize on what you believe in and what you're doing for clients and markets so that when the uncertainty clouds lift, you're in the best position to take advantage of it. So
yeah, and that's an excellent point. So, and a good segue, Dennis, where does SEI fit into the ecosystem and what solutions do you provide?
So we're a three legs of a stool type company. So we offer technology services, operational services, and asset management services to the investment manager, wealth management markets globally. So we help those who have money to invest. And in certain markets, we actually go direct to those markets to help those end investors. So our assets around technology, operational services, asset management services as an outsourcer, our clients are looking to us for solutions and for answers to help them with their own infrastructure needs, their own operational resilience needs, their own business performance needs. So we become in many ways the backbone of our clients' technology and operations in the particular markets that they service. So where we sit in the ecosystem, we have a terrific window into end markets because we sell to some of those directly ourselves. We have an additional window to those end markets because we work closely with financial intermediaries who reach those end markets, for example, the mass affluent, high net worth investor market. And then because of where we sit technologically and operationally, we have connectivity throughout the ecosystem of financial services, fintech, the custodial networks, the pricing and data service networks, the regulatory frameworks and regulators that our clients all deal with. So we kind of sit right in the middle of the ecosystem, both looking outward towards the markets and then back inside and out, back towards the infrastructure that supports those markets.
Yeah, you truly are in the sweet spot of the markets. So what areas of R&D are you seeing the most spend?
So when we look at R&D, we have, it sounds simplistic, but a fairly simple approach, and that is to look at the businesses we're in. And if you take a general picture of a business life cycle, starting from idea to incubation, to market entry, to growth period, then maturity, and then what do you do post-maturity, we look at and plot all of our businesses and activities on that business cycle chart. And we want to make sure that we have R&D spend both in the idea side of the curve all the way through to the maturity side of the curve, because we want to make sure that we're investing in businesses that, while they may appear to be reaching their peak in terms of opportunity, how can we extend those businesses into the future? So one of our largest businesses around wealth management processing, we went through that exercise a number of years ago and made a decision to build a brand new global wealth processing platform and technology to support the needs of the global wealth management industry that ultimately will serve to replace some of the legacy or infrastructure technologies we have today. Similarly, we look at the incubation side. So what ideas do we have early on that we need to provide some level of capital investment to help flush out those ideas to make a determination, are they worth additional investment, and then market entry, and then provide new growth engines for us 3, 4, 5 years into the future. So sounds very simple in the sense that taking our businesses and plot them on this business cycle curve, but making sure we have good balance up and down the curve with the things that we do for our markets and our clients.
And Dennis, I'd like to wrap asking your outlook regarding outsourcing. In the course of my coverage, I hear more and more with asset managers and the institutional buy side looking to outsource more operations, more technology kind of roles and support. Do you think that's a trend that will continue?
Yes, we're big believers in the future trend of outsourcing, and we've certainly have benefited from that trend over a number of years. Every time there's disruption, it seems like coming out of that disruption, elements of markets we serve, or maybe firms we spoke to in the past that weren't convicted around outsourcing, have a change of thought or a change of heart coming out of these disruptive periods. And we lean on really the basic reasons why firms should outsource. One is more efficient use of their own capital and where they invest capital in their business. Second is access to expertise. And that expertise is the ability to keep up with the pace of change that's going on in our markets, particularly on the technology and operational front. A better business model alignment, so making sure your expense structure is better aligned with your revenue sourcing. And what we've seen through these different disruptive periods, the firms find out pretty quickly that their expense model does not align well with their revenue model, and outsourcing can help with that. Finally, talent challenges. As we all know, we're all in talent businesses and talent-driven businesses, and a growth company like ours, and one that is committed to technology in the financial space as well as delivering operational services in the financial space, we can provide a terrific career path for individuals who want to pursue that type of career, versus if you're in a single firm doing it just for yourself, sometimes those career paths are fairly limited. So we help outsourcing helps firms keep pace with the ability to acquire or access talent and develop that talent over time.
Yeah, and Dennis, I'm going to throw one more thought at you since you brought up technology and how that's helping to build a workforce. I think, one of the silver linings to COVID-19 and understanding how to pivot and operate in a virtual environment, it's a win-win for employers because it expands their base of their talent pool, and it also is a win-win for the employees because they have access to work for companies they might have geographically been able to or would have had a seat at the table for an interview. So I think what we're learning with technology is great when it comes to building those diverse workforces.
You're absolutely correct. And we've already had that positive experience at SEI during this pandemic. We, early on in this crisis, we repatriated about 120 jobs that we had outsourced over the years. We repatriated those positions and hired our own direct workforce, and really took advantage of the fact that geography is no longer an impediment to talent access. We were able to onboard those employees, engage them in our culture as best we can, and we're still learning how to do that. I think all companies are learning how to do that. Train them up, and they are active participants in delivering services for our clients every day. So you're absolutely correct that I think what we've learned in this pandemic, if we didn't know it before, is that there's no longer a geographic boundary relative to your access to talent, and that we certainly are engaged in that, and our workforce development teams are expanding their capabilities and their reach for the talent we need to drive the company into the future.
Yeah, that's encouraging to hear. Dennis, thanks so much for joining us on Trade Talks.
Thank you very much, Jill. Thanks for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.